Thank you everybody for joining us tonight. We are here with Ken Toops. He's here as an employee of Florida Credit Union and also QSO Financial. He is here this evening to talk about retirement plan rollover options. So here you go, Ken. Thank you so much.
Thanks, Heather. Thanks for joining, everybody. My name's Ken Toops, and I am the financial advisor here at the Florida Credit Union. What I do here at the Florida Credit Union is I help members with their retirement. I can help people with other financial planning needs. We basically are a full service brokerage, so we can offer just about any investment out there. So hopefully we're going to get some good information today on rollovers. But if I don't talk about something else that you might be interested in, here is my contact information. This information, again, will be on the last slide, so don't rush. But if we would like to set up anything to talk about, please, if you feel free to shoot me an email or give me a call. Now, at the end of this presentation, we'll have some time for some questions. If you can see on the right-hand side, I believe there's a chat function on there. So if you'd like to write any questions down, I will be able to get to those when we wrap up the presentation. And again, as I just mentioned, I'll also have my contact info up again. So if you want to take just a minute to grab a piece of paper and a pencil or a pen, we'll be able to jot down those questions as I'm going through this presentation. All right, so we're going to talk about some retirement plan rollover options. So I actually get this question a lot. What to do with my former retirement plan? And really, you've got about 3 options that you have to choose from. So option number 1 is going to be to do what's called a cash out, and that's going to be basically taking the money out of the plan. Second option, you can do nothing and just stay in with your current plan. And then the third and most popular option is going to be rolling it over to an individual retirement account. And in the upcoming slides, we're going to actually talk about the advantages and disadvantages of each of these options. So let's talk about the first option that we said was cash out. Now, cash out usually is not going to be the best option because if you think about it, if you're under the age of 59 and a half, if we do a cash out, you're going to get hit with a 10% early withdrawal penalty. Not to mention it's going to be taxable, so it can be a very expensive option to cash out. Not to mention you lose one of the big benefits of a retirement account, which is that tax deferred growth potential. So let's talk about the potential cost to cash out. So this is just an example, but as I mentioned, cashing out is usually not going to be your best option. And a lot's going to be depending on, what you're vesting and penalties and taxes. This can be a very expensive option. So on this slide, what we're taking a look at is somebody that maybe has a retirement 401k value of around $5,000. Now, maybe they haven't been with their employer for very long, so they're not fully vested. So really that $5,000 is more like $4,000. But then if you were to cash out, a 401k or a 403b is going to do a mandatory 20% withholding. Sometimes you might be in a higher tax bracket than that, so that might not be enough. So there might be additional funds taken out if you're in a higher than a 20% bracket. And that 10% premature early withdrawal penalty if you're under the age of 59 and a half. So if we just look at that, you're taking $5,000 and the cash in your pocket is only going to be about $2,600. So you can see how expensive of an option cashing out can be. But also if you cash out, you're going to lose out on that potential tax deferred growth that I mentioned. So let's go to the next slide and we'll kind of see how that works. So here, let's say the person we just spoke about decided to cash their $5,000 401k out, and after all the taxes, all the penalties, they've got $2,600, and let's say they put that into an investment, and we're just going to assume that this investment was invested for 35 years, getting 5% a year interest, at the end of that 35 years, that account would have grown to $9,431. Now that sounds pretty good, right? Well, let's say that that same person chose to do a rollover instead of cashing out, and we're going to assume the same 35 years and getting 5% a year. The account value at the end of that 35 years would have been $27,580. So roughly about $18,000 more just by staying in a retirement plan. So let's talk about option number 2. Option number 2 is going to be staying in. So you might think this is the easiest option, but it may not be your best option. You know, if you decide to stay in, we're going to talk about the pros and cons on the next slide. But you're really going to be limited to what you can do inside of that plan with how your previous employer had that 401k or 403b set up. So let's kind of talk about the pros and cons of staying in. So one of the pros to staying in with your current plan if you leave your employer is, well, it's simple. You really don't have to do anything. There's no paperwork involved. But again, you might not be doing yourself the best service by, you know, kind of being lazy and just leaving it. One of the other pros is going to be, you know, maintaining tax deferral. So, you know, stays in the tax deferred account. And a pro and potentially a con is going to be, you know, you might have lower fees, but your fees might actually be more expensive staying in that plan also versus alternative like a rollover. So some of the negatives or the cons to staying in is you're not going to be able to make contributions to this 401k anymore. And the main con, if you ask me, is going to be you're really limited on what your investment options are inside of a 401k. So many of you that have had a 401k or a 403b out there have probably seen what kind of investments you can do, and typically those are going to be just mutual funds. And usually it's going to be about a handful of funds that you get to choose from. Well, one of the great options, and we're going to talk more about this in a few slides, but if you decide to roll this over to an IRA account, you have thousands of different options available to you where you don't have that inside of your 401k. Now, another negative potentially to staying in is you don't have the ability to borrow against that 401k. And honestly, do you really want your old company, you know, kind of being in control of your retirement account? Probably not. But one thing to consider before moving this plan is going to be if you have a 401k loan out against your current 401k. If you decide to roll over or move to a new plan, well, that loan is likely going to have to be paid back. And that loan could be taxed and there could be penalties with that. So you might want to check with your plan administrator or at least a tax professional, you know, if you do have a loan and you're thinking about doing a rollover. So option 3, that's going to be to roll over to either a new employer's plan. So maybe you switch jobs and your new job has a new 401k plan that you would be able to roll your old 401k plan into. Or you can choose to roll it into your own IRA plan. Now, to roll into the new employer plan, you want to do that if you're thinking about taking a loan in the future. Now, if you don't think you're going to be needing to take a loan against your 401k, usually you're going to want to make sure that you roll that into a traditional IRA, and that goes back to having a lot more investment options. So if we choose to roll over to an IRA gives you the most options, and our options are just a good thing. You know, you don't want to have your plan dictate what you can do with your funds. So an IRA is going to give you a lot more control over your own assets. So this is going to be the option that's going to give you the most to choose from. You can still make contributions to an IRA account. So if you're under the age of 50, you can do up to $6,000. And if you're over the age of 50, they allow you to do what's called a catch up, and you can actually contribute up to $7,000 to the IRA plan. Now, as I mentioned, you have a wide range of investment options inside of the IRA account, and you can actually have both IRAs and 401ks, and you can max both of those out. Now, if you've heard of IRAs, you know that there's two main types. We have traditional IRAs and we have Roth IRAs. So they work very similarly, but also there's some pretty important differences. So let's kind of go over, how the traditional and the Roth IRA compare. Well, they both do not have an age limit. Now, if we're going to be making a contribution to either one of these, you're going to need to make sure you have earned income. And earned income is going to be wages, it's going to be salary, it's going to be commissions or tips. What earned income is not is, retirement pension or Social Security income. So to be able to contribute to an IRA account, we need to make sure that we have earned income. Now, that's a difference between contributions, and you can always roll over a previous retirement plan to that IRA account. And there's an unlimited number of rollovers that you can do from those plans. So some of you might have had, multiple different companies that you've worked for that have, old 401ks out there that we're not contributing to. Well, all of those 401ks or 403bs can be rolled over to that traditional IRA, even if it's multiple. So the traditional and the Roth have the same exact contribution limits and the same unlimited rollovers. Now, further comparing the Roth and the traditional, one of the main differences is going to be the funds used to for the contribution. So with a traditional IRA, you're going to have pre-tax money that goes into it, whereas a Roth is post-tax money. So for an example, let's say that you have earned income of $50,000 a year. And let's say that we decide to contribute $5,000 to a traditional IRA. Well, now you only pay taxes as if you made $45,000. So usually that's going to either limit what you owe in taxes or increase your refund that you would be receiving. Now let's compare that to a Roth IRA. And let's say the same example, we have $50,000 and we decided to contribute $5,000 to a Roth IRA. Well, it still looks like you made $50,000 and that's what you would, pay taxes on. But when you go to take money out of a Roth IRA, as long as it's been held for, over 5 years and you're 59 and a half or older, all of the distributions from a Roth IRA are going to be tax-free. So it's a big difference between the traditional and the Roth is, how the account gets funded, either pre-tax or post-tax money. This is something I can definitely help you out with, decide what would be the best option for you. Now, another main difference between a traditional and a Roth IRA is what's called a required minimum distribution. So you may have heard of a required minimum distribution or an RMD, as they're commonly abbreviated. And recently the age has been changed to 72, but in a traditional IRA or even just a regular 401k or 403b, when you turn age 72, you're going to be required to take a certain amount out of your retirement account. Now, you'll be doing that for the rest of the life of the retirement account. Now, with a Roth IRA, you do not have to take a required minimum distribution. So deciding on what's best option, that's something that I can definitely help you out with. Usually we know a cash out is going to be a very expensive option. Staying in, might be a good option to, roll over to a new employer plan if you're thinking about taking a loan out. But again, we're going to be pretty limited on our investment selections. So a lot of times, rolling over to an IRA account is going to make the most sense. Now, I say most of the time. So just for an example, I sat down with one of my clients, this was about a month ago, and we reviewed her 403B, and she was actually looking, she was, pretty set on rolling this to an IRA account. But she had a particular investment inside of her 403B that was something that was just, I could not offer her. So, I let her know that it was best to stay in that plan. But, maybe that's, different for everybody. So if you'd like to, if you want to set up an appointment with me, I'd love to review your previous 401ks, and I can let you know if, staying in or rolling over to an IRA is going to be in your best interest. But take action. Don't just sit there and let those old 401ks just sit there and do nothing. It's a great idea for yourself. There's a lot of resources out there where you can research these topics. What might be a better option for you, rolling over or staying in your current plan. Or, like I said, come speak with me. I'll, definitely give you the best advice that I possibly can. And I'll let you know if, I think a rollover to a traditional IRA is going to be in your best interest, or if staying put is in your best interest. But please make an appointment with me. I'd be happy to take a look at your previous plans, and we can go from there. So this was kind of a short presentation, but I just wanted to go over, the good and the bad with these rollover options. So here's my contact information. Please note my extension. Please note my email address. I will answer any questions that have come in. But if you don't feel comfortable maybe discussing it in a group setting, please feel free to shoot me an email, give me a call, let me know when would be a good time for us to either meet or just speak over the phone. And I'd be very happy to talk with you about anything that we spoke about today. Or if it's something completely different, I'd be happy to help you out with that as well. So I'm going to see if there's any questions that have come in. All right. Let me see here. So one of the questions that have come in is there any cost or fees to meet with me? And that's a great question. And no, my services are complimentary through the credit union. Now, if there are any investments that do have any cost or fees, I will 100% disclose those before we make a decision on how to move forward. And let's see. I think that is the only question that I see. So I just want to thank you guys for your time today. If there's anything I can do for you, please do not hesitate to reach out. I hope you got some of this information, and I hope it's going to help out. Thanks so much.